Good morning, ladies and gentlemen. Good morning, Mr. Vice President. It's always a pleasure to be here and to follow on the tradition of our conference on financial integration organized by the ECB and the European Commission as every year. As you all know, the current global situation presents many challenges, and these challenges make the need for more resilience and more competitiveness of Europe, of course, more needed. The resilience and the competitiveness of Europe can be enhanced certainly by economic and financial integration, because it would develop more risk sharing, enhance growth, meet the daunting challenges that we have in terms of digital economy, climate change and aging population, and of course foster more autonomy of Europe in this very uncertain global landscape. So today, obviously, we focus on financial integration. Our conference will follow the usual format. So first of all, the Vice President will hold the opening speech. After that, we will have a presentation of the reports by the Commission and by the ECB. Following that, we have the pleasure to host President Letta, former President of the Italian Republic and President of the Jacques Delors Foundation for a fireside chat. Then we'll have a coffee break. After that, we will start with the two sessions on that day. The first session is dedicated to pensions. The title is From Pillars to Portfolios, Rethinking Pension for Entrepreneurial Europe. And the second session this afternoon is dedicated to the banking sector. How can a more integrated banking sector enhance the competitiveness of the EU economy? And finally, we will finish the day with a keynote speech by Commissioner Maria Luis Albuquerque. All along the event, and to be interactive, there will be an online poll organized. Philippe is here to explain everything if you need be. So an online poll where you have a series of questions, and we'll analyze the aggregation of your answer at the end of the conference. So without further ado, I will pass the floor to Mr. Vice President. The floor is yours. Thank you.
Thank you very much, Gil. Good morning to everyone. It's a real honor to speak to you today on a topic that lies at the core of Europe's economic resilience and future growth, financial integration. In an era of geopolitical fragmentation, technological change and economic uncertainty, ensuring that the European Union's financial system is robust and competitive is not just an economic imperative, it's a necessity. With a well-integrated financial system, the EU can weather external shocks, foster sustainable growth, and strengthen its position in an increasingly competitive global landscape, while also allowing business to access capital more easily, facilitating cross-border investment and providing Europeans with better financial products and services. In short, financial integration is crucial to the prosperity, stability, and competitiveness of the Economic and Monetary Union. The Savings and Investments Union is at the heart of this vision, reflecting the essence of the EU project itself: unity, cooperation, and shared prosperity. Today, I would like to begin by taking stock of the progress that has been made in financial integration before highlighting the reforms, particularly of market integration and supervision, that are now within our reach. I will then outline how we can simplify and strengthen our regulatory framework to support a truly competitive and resilient European financial system. Over the past few years, financial integration in the euro area has advanced significantly, cementing its role as a cornerstone of the EU's economic architecture. ECB indicators show that financial integration is now above the average level since the creation of Economic and Monetary Union. Afterwards, you will have the presentation of the report with all this data. The progress reflects two improvements. First, a lower dispersion in euro area asset price and yield differentials across bond, equity, banking, and money markets. And second, a higher degree of capital allocation and portfolio diversification within the euro area, with cross-border debt activity standing out as a key driver. These positive developments have not only deepened integration, but also strengthened the resilience of these markets. Despite significant progress, the full potential of a deeply integrated financial system has still not been unlocked. Cross-border financing in areas like bank lending and equity markets remains at relatively very low levels. For example, cross-border corporate lending within the euro area account for just 14% of total corporate lending, with equity market integration showing troubling signs of decline since 2022. Foreign direct investment within the euro area has fallen to historical low, shining a light on the structural barriers that still hinder seamless capital flows. These contrasting trends underline the need for target policy interventions to address structural barriers and boost integration in underperforming areas. Equity markets, in particular, warrant immediate attention due to the critical role in fostering innovation, supporting entrepreneurship, and diversifying funding sources for European businesses. The principle that capital follows the real economy underscores the relationship between economic growth and financial integration. To fully reap the benefits of a unified financial system, single market reforms and the saving and investment union must advance together in parallel. If we coordinate our efforts, we can build a resilient and unified financial ecosystem that supports European growth and strengthens the EU's global competitiveness. We now have a key opportunity to further deepen integration. The market integration and supervision package, if adopted, could lay the institutional foundations for a truly integrated market capable of mobilizing investment at the scale Europe needs. There are three features of the package that I want to highlight. First, a genuine single rule book for capital markets. This means further harmonizing rules and transforming provisions from directives into regulations that are, as you know, directly applicable across EU member states. A single rule book strengthens the level playing field, reduces legal uncertainty, and fosters greater consistency. Second, support for a tokenized financial ecosystem. By adapting the distributed ledger technology, DLT, pilot regime, we can facilitate innovation in digital financial services while preserving robust regulatory oversight. Europe should be a place where new technologies can scale up safely and efficiently. And third, a more European supervisory framework. A stronger, more consistent supervision at EU level will enhance the resilience of the system and remove the barriers that still limit cross-border capital market integration. Taken together, these measures are much more than mere technical adjustments. They build the foundations for deeper financial integration and a more dynamic capital market, thereby boosting the EU's competitiveness and strategic autonomy. In today's global environment, it's crucial that this package is implemented swiftly. If European firms are to thrive globally, they need the support of competitive and resilient banks. The euro area banking sector is a cornerstone for Europe's financial stability and economic growth. Competitiveness must go hand in hand with resilience. Both can be achieved by simplifying processes, fostering integration, and enabling economies of scale. Well-integrated markets and increased cross-border consolidation enable banks to diversify, strengthen their business models, and better support the real economy, especially during times of stress. While reforms since the global financial crisis have bolstered banks' resilience, national barriers and market fragmentation are obstacles to fully unlocking the benefits of the single market. The crucial step towards strengthening Europe's competitiveness and deepening financial integration is the completion of a truly single banking market where capital and liquidity can move across borders and all deposits are protected equally. To this end, the banking union should be regarded as a single European jurisdiction by all relevant competent and designated authorities. Moreover, the finalization of a fully fledged European deposit insurance scheme, EDIS, is a pivotal step in advancing the banking union. A robust EDIS will protect deposits equally, enhance financial stability, and facilitate cross-border transactions, fostering a truly unified and resilient financial system. In the same vein, allowing capital and liquidity to flow freely within cross-border banking groups in the banking union would enable resources to be promptly and efficiently transferred within groups, especially in times of stress. Progress on those priorities is essential to reduce fragmentation and create a unified and efficient financial ecosystem that supports Europe's long-term economic growth and prosperity. Deeper financial integration must be built on a foundation of resilience. A sound regulatory framework that ensures the stability of the financial sector is essential for long-term growth, and it can be achieved through simpler and more harmonized rules. The EU's regulatory framework is currently still fragmented across member states, creating inefficiencies and inconsistencies that undermine resilience and competitiveness. This fragmentation restricts the financial sector's ability to support the real economy and limits Europe's potential to act as a unified national financial center. Simplified, harmonized rules are therefore essential to unlock the full benefits of integration. Recognizing this need, in December 2025, the Governing Council endorsed a set of recommendations aimed at simplifying the regulatory, supervisory, and reporting frameworks for banks. Another critical area requiring attention is the growing regulatory gap between banks and non-bank financial institutions. As EU capital markets expand and become increasingly interconnected across borders, the prudential framework must also evolve so that emerging risks to financial stability can be detected and addressed. Adjusting the EU macroprudential framework by developing a complementary macroprudential approach for non-banks alongside macroprudential oversight is therefore essential. But harmonization must go beyond prudential rules. Reducing non-prudential barriers, such as disparities in solvency laws, tax systems, and corporate laws, will further streamline operations and remove obstacles to cross-border activity. These measures are critical to fostering a competitive and resilient financial ecosystem that can finance innovation and growth effectively. By addressing these regulatory gaps and inefficiencies, Europe can create a robust framework that supports financial stability while promoting integration and competitiveness. A united, simplified approach will allow the EU to position itself as a global financial center, reinforcing its strategic autonomy and its ability to adapt to emerging challenges. Let me conclude. By advancing the Savings and Investment Union, considering the Banking Union as a single European jurisdiction, finalizing EDIS, and simplifying our regulatory framework, we can create a dynamic and competitive financial system that supports sustainable growth. Therefore, I call on policymakers and market participants to work together to ensure that Europe remains resilient, unified, and a more independent jurisdiction in the present geopolitical framework. Thank you very much.
Thank you, Luis. Thank you, Vice President, for this enlightening speech. It's time now for a few questions, and if you allow me, having the privilege of sharing this session, I will ask the first question. During your mandate, what has been, in your view, the most positive development in terms of European financial integration?
Well, I think that no, I have some doubts. So I would have liked to have a much more progress there. I think, I think that we made much more progress when I was finance minister than when I was here at the ECB. I have to be honest with you. I think that during my times, because normally Europe, the Union moves in times of crisis. And I remember the debt crisis and the banking crisis, and I think that there the SSM was created, was incorporated, and even the single resolution institution, the single resolution board. I am a little bit disappointed because EDIS has not been completed. If you read, for instance, our report, our reply to the European Commission, because they have made a request in order to have, opinions on the competitiveness of, the banking industry, that is a report that the Commission is going to release, after summer. We say very clearly there that a fully fledged EDIS is going to be necessary. And secondly, I am much more, on the no positive side than on the positive side. I think that, for us, to make further progress on the single market would have been key. I think that capital flows normally, follow the integration in the goods and services markets. And the obstacles, the difficulties, the lack of harmonization that we have for the single market for goods and services is one of the elements that is limiting, the free flow of capital in a single jurisdiction as this one. Now we are in a different time. I think that it's quite clear that Europe has to become much more independent. We are in a different geopolitical situation. And I hope that policymakers will realize that further integration is going to be key. So it's not time of a debt crisis as the one that we had 15 years ago, but I think that the present geopolitical context really calls for further action. And I hope that policymakers, the Parliament, the Council, the Commission, will realize that further integration is the only way forward.
Thank you, Luis, for this very lucid answer, not fully positive, not fully negative, but I think very realistic answer. Are there questions in the audience, please? I think you can ask questions directly here or online question for people not attending the conference. Philippe has a question.
Yes. I guess we would have one that relates to the strategic autonomy. So what do you think that Europe should and can do actually to advance strategic autonomy and the competitiveness of its financial sector?
Well, strategic autonomy is a polyhedric concept. I think that there are several areas that we need to progress and to make clear, to take clear measures. I think that one of them is defense. Has nothing, very little to do with financial integration, but I think that defense is one of the areas now. I think that the existential priority of Europe is to try to improve, the defense collectively. Given the geopolitical situation, we have the invasion of Ukraine and the Russian threat. And simultaneously, well, the umbrella and the protection from the US is a little bit fading out. So defense is, in my view, the first element. The second one is energy autonomy. I think that to make progress on the green transition is important, not only for climate, also in order to reduce our dependency from fossil fuels that we have to import, that we do not have in Europe. So it's the combination of these two aspects that, in my view, are relevant. Is climate, and is to become more autonomous and to depend much less from external sources for delivery of energy. The third area, in my view, should be, IT, the technological aspect, the cloud, artificial intelligence. Well, now we have, the debate about mythos, anthropic, and, the kind of strategic issues that, this situation, this dependency from foreign suppliers of technology could pose for Europe. And finally, for instance, means of payment. So all these are, I think that the digital euro is something that, that is very close to, to the strategic approach of, the ECB and the priorities and the strategic priorities of the ECB. Now, if you look at who are, what's the nationality of the owners of the main means of payment in the euro area in Europe, you will realize that they are not European. They have a different nationality. So it's a polyhedric concept, but I think that is the only way forward. And simultaneously, well, with respect going a little bit more to the economics, to the economic and financial space, I think that the single market is key. The single market, to have a real single market for goods and services, in my view, is key. It's very difficult to have integrated capital markets without a real single market for goods and services. The banking union is clear. Well, it has to be delivered. No, there we have a lot of talk and very little walk. Well, if I continue, with mentioning, things that are vital, in my view, is perhaps, to be more united in terms of a fiscal facility, a common fiscal facility in the euro area. So, the areas of progress are there. I think that we have to be ambitious, but I think that the only alternative is to be independent from a strategic standpoint. And in order to do that, first of all, we have to put, national views, a little bit below the pro-European objectives. But it's not easy. Simultaneously, because I think that one of the problems that we have now is that we have fragmentation not only at the capital level, the capital market level, but as well, at the political level. So it's important that we are a little bit more united. I can say all these things after attending, for instance, the ECOFIN for more than 15 years, and my conviction is that the only way forward, is to have a much more integrated Europe, trying to overcome the political disparities that we have now. If you look at the situation of the European Parliament, it's clear, that well, some of these projects are going to be difficult to be implemented because of the political situation and the landscape there. But I hope that eventually, common sense will prevail.
Thank you. Philippe, do you have any other question in the attendance or online? Let's try. You have the opportunity of having the Vice President, so please ask questions.
Well, thank you. I was wondering, you mentioned EDIS a couple of times. Could you elaborate a little bit more on the factors that are hampering EDIS and maybe solutions that could overcome these? Thank you.
Well, I think that a fully fledged EDIS is key. We need to have, common coverage of deposits all over the union. Well, we started to discuss EDIS, when even 12 years ago, and it was a sort of tug of war. Some people say, well, if we want to make progress on EDIS, we need, to reduce, the nexus between sovereigns and banks. I think that now there is a great advantage in comparison with those times, 10, 12 years ago. The great advantage is that the situation of the banking industry in Europe is much better now than it was. Well, I remember, the times at the beginning of the second decade of this century, with the situation and the doubts about the Spanish banks, about the Spanish saving banks, the Italian banks, and the Greek banks. I think that now is, those kind of concerns have started to disappear, and I think that we have a much more homogeneous situation of the banks all over Europe. So theoretically, in principle, this should not give rise, to the kind of discussions that we had 10, 12 years ago. And it should pave the way for, discussing and making progress on EDIS. But we need the political will. I think that to have a much more homogeneous banking industry, I think that is something that could be positive in terms of paving the way for the discussion in the near future.
Thank you. Philippe?
Yes, we would have one more question from the online audience. How can a 28th regime help and boost the single financial market, but also the goods and services market?
Do you refer to the 28th regime?
Yes.
Okay. Well, I think that is one of the alternatives. I think that is an avenue that is worth to explore. I think that's a proposal. At the end of the day, it's going to be a sort of enhanced cooperation. But I think that it could be a way forward. Now, we have to try to put in place different alternatives in order to be more integrated. So I think that it's an alternative that is worth to explore and to navigate. I don't know whether now there is a lot of enthusiasm in the European Commission with respect to the 28th regime. You can ask Commissioner Albuquerque afterwards. But well, we have to use all the available instruments that we have at our disposal in order to make progress. And I think the 28th regime could be one of them. There's another one there.
If you have time, thank you. We hear a lot about the importance of developing European capital markets and also about banking competitiveness. My question is, thank you very much. My question is, could European banks become more competitive if capital markets developed and banks weren't trying to hold up the entire economy to the extent they are today?
Well, I think so. I think that capital markets and and banks they are interconnected. And I think that I fully agree. Sometimes they can say, well, we are going to have more competitors from the capital market space, no? But I think that it's the other way around. I think that they are interconnected, and I think that this is not a zero-sum game. Both of them can make progress. So I think that is going to be key. But I come back to my main point. My main point is that it's very difficult to have capital market integration without a real single market. Now you are going to have Enrico Letta, the former Prime Minister of Italy. I think that his report on the single market is very, very good. And I think that this is the key element in my view, my personal view. And this has to do with something that is not easy because there are some political obstacles, as you know perfectly. For instance, to have a harmonized taxation on savings all over the Union, or the insolvency law. It's something that is delicate, and there is something that is important. Taxation is on the hands of the finance ministers normally, but insolvency laws, for instance, are in the hands of other kind of ministers, and you can have difficulties there. But I think that the key element, in my view, the crucial development in the future will be the single market. Without a real single market for goods and services, it's going to be almost impossible to have capital market integration.
Last question, maybe. Philippe, do you have a question? Or?
I would have one last question from the online audience. Do you think SIU has potential to reduce EU current account surpluses?
Current account surplus. Well, the current account surplus of the balance of payments, I suppose that he refers to. Well, I think that this is one of the important questions because we have we export capitals overseas as the European Union, as the euro area, because we have a surplus of the current account. So you can approach the current account of the balance of payments from different perspectives. There is, in my view, one that is for capital markets and for financial, from the financial standpoint, I think that is very important. That is, a surplus of the current account of the balance of payment is the consequence of a savings ratio that exceeds the investment ratio of the economy. So, and then, as a consequence, you have to export the excess of savings to the rest of the world. I think that the problem is not the level of savings. even though the level of savings since the pandemic has been quite stable in the euro area. So consumption has not gone up as we have projected for a long period of time. And the savings ratio is quite stable, it's quite high. I think that the real problem is investments. Why the investment ratio in Europe is so low? And here, this connects with the single market, with why investment projects in Europe are not attractive enough in order to focus our savings into these projects. And instead, we have to go overseas to find investment projects that are attractive enough. I think that this is the key point. If the investment ratio goes up and the savings ratio is stable, well, our current account surplus will start to reduce, and the capital exports and capital external flows will start to decline as well.
Thank you very much, Luis. Thank you for this very enlightening discussion. From your vantage point as former Minister of Finance in Spain and board members, and you supervise all the work at the ECB on financial integration, financial stability. So we're very grateful to have had you for 8 years. It's not finished yet, and to have your view this morning on financial integration. So let me close this session and move to the next session. Thank you, Vice President.
Thank you very much,
Thank you very much.
Thank you very much.